Yeah, I noticed on those sectors that we are seeing tech down once again, the XLK, the Infotech Index right there. And it's been sort of suffering quite a lot lately. Yeah, let's do that 5-day.
Yeah.
And indeed, we have been seeing it slide month to date down 9%. Yeah, pretty lousy here. So let's talk a little bit more about what's been happening within technology here. We're tracking that fresh sell-off in tech. We talked about Tesla. The Nasdaq specifically is down more than 30% in 2022. It is the underperformer by far of the three major averages. You can see there some of large cap tech and what it is doing today. But if you look at year to date, Apple's down almost 27%. It's the company's worst yearly performance since 2008. And those superlatives are true of many of the other large cap tech players, you guys.
Yeah, I like this note from Matt Melly, friend of our show over Miller Tabak, noting that Apple is probably the most important stock in the market to watch over the next week or two. Also calling attention to Apple stock must hold at $130 in terms of support, at least if you're a chart fan, has to hold that level. If it doesn't, it might signal a new fresh wave of tech selling into early next year.
Yeah, one thing that I keep an eye on within the sector as well is the semiconductors, because even within Apple, you think about a company that touches everything from consumer electronics all the way into the chips space and where the demand can be driven more outsized by a company by Apple based upon the orders that they place in for some of those semiconductors, and then even into not just the end consumer, but also into the larger businesses that may be purchasing from them. Apple touches all of that, but within semiconductors, we've seen a significant decline. You're looking at the past month for the SOX semiconductor ETF index from iShares, and that's down by about 7% over that time. And year to date, it's down by about 38%. So keep a close eye on some of those semis going into next year. It has been quite the sob story in semis, and continuing to watch to see where demand comes back, especially at a time where you've got some of the slowing shipments in handsets, but then additionally on the PC demand side, just a question of when that's going to return as well.
Too much inventories. We heard that from Micron last week. There is too much chip inventory, and wow, what a change in fortunes for that industry.
Yeah, I mean, look at how these stocks have performed, right? The question is, at what point does it turn, right?
Yeah.
At what point is that priced in, the lousy? I mean, most of these companies have said the situation is not yet resolved. So does it have to actually resolve before the stocks turn? How much in advance do they anticipate it? What kind of signaling do we get? So it should be very interesting to watch that. I want to go back to the Nasdaq 100 for just a minute here. Here is the year-to-date performance from the Nasdaq 100. And if we go to equal weight, we can get a better picture of what's going on here. It's actually not the largest cap necessarily that has done the worst, although Tesla's on that list down 68%. But Lucid is the bottom of the Nasdaq 100 and reflects the more general sentiment around EV makers, right? And the sort of emerging technologies that were supposed to sort of already be here, I guess, that, I feel like everything got pushed back this year in terms of expectations, whether you're talking about this, whether you're talking about some of the other so-called edge technologies like AI. So it's been interesting to watch what's been happening with this re-rating.
And really looking at that bottom line as well. You've got Peloton within there. You've got Okta. These are some of the pandemic darlings as well that we've been keeping close tabs on. And the shift that's taken place this year, just in the demand that they're seeing and the operational changeovers and restructuring of costs that they've had to initiate, the pull forward in demand just so drastically shows this year how much of that demand has started to decelerate or just wane almost in entirety in some cases, and that's led to some partnerships. You've seen DocuSign have to initiate some of those partnerships to make sure that they've got a better partner in Microsoft even that can allow them, DocuSign, a better sell-through base. And then just lastly here, you think about what we've seen with Meta over the course of this year, just major spending that they've had to initiate, trying to make the metaverse a real thing, even though the virtual reality solution has yet to really prove fortuitous in terms of their financials at this point in time.